Hi, I'm Daniel, an 8-year professional prop trader, helping beginners become profitable FX traders in our Trading Lab community. I run the Trading Lab community. Check the video description for full details. Today we dive into gold technical analysis. I'll share some insights from our Trading Lab community posts as we go. Right now we have the 1-hour chart up, and as always I'll cover the short-term outlook first. At this point, the bearish outlook I shared with Trading Lab members earlier still stands. Around this level, I was delivering today's Trading Lab members only livestream analysis. So the trend here is clearly bearish, with both the highs and lows continuing to push lower on the chart. As always, let's go ahead and walk through the detailed analysis starting from the daily chart. For gold, the previous day closed as a rejection candle, and the overall market structure is defined by a sideways consolidation range based on these two key candles. Within that range, a smaller doji candle has formed, signaling that an inner consolidation range is developing once again. Looking back at yesterday's candle, the high touched the upper boundary of this horizontal range, suggesting that selling pressure was likely triggered right at that resistance level. As further confirmation, today's candle opened and retested that same resistance high before reversing back to the downside. Therefore, this large horizontal range breakout attempt has failed, meaning price will most likely target the lower boundary of that horizontal range going forward. Also, as Daniel mentioned earlier, we have a doji candle here. When we isolate this range, the body of the previous candle aligns precisely with that doji formation. So the upper boundary aligns directly with the recent swing high, and when we analyze this tight consolidation range, both levels overlap precisely. So with this failed breakout to the upside, we can say there's a fairly high probability of retesting the lower boundary of the range. Whether viewed as a failed breakout of the larger range or the smaller doji level range, both signal a bearish breakout failure to the upside. Either way you look at it, both readings align on a bearish bias, so going forward we should default to a downside outlook. And today price has been testing lower right from the open. That's the price action we're seeing right now, and there's one more point to cover. If price breaks above this high today, it would trigger the large sell positions placed the previous day to work against those sellers. Those stop loss orders would act as fuel, making it easier for price to push higher, and volatility would likely spike at that point. This raises the odds of a clean breakout above the top of this wide horizontal range. So, by holding both perspectives, we can adapt our trading plan as price action develops, switching scenarios smoothly depending on how the market moves. Now let's move to the 1H time frame. The day before, Daniel covered this exact analysis exclusively for Trading Lab members. Here, Daniel will cover the key points only. Full detailed analysis is exclusive to Trading Lab members. First point, price opened with a gap up. Since this reversal candle printed, the bearish price action has been persistent, with selling pressure continuing to dominate on the lower time frame. Given the strong gap up and powerful bullish swing, we'd ideally want to look for long entries, but within this current pull down it's difficult to find one. So the usual setups are not functioning well here, and we should keep in mind that a sideways range is likely. And third, when we factor in that we're trading inside a sideways range, what kind of adjustments should we be making to our strategy? We should also keep in mind that breakouts from this range are highly likely to be fakeouts. Unlike trending markets, breakouts here tend to fail as fakeouts, and this is a key risk point every trader should watch carefully. The ideal scenario going forward would be a clean breakout above resistance, updating the highs within this sideways range. As of yesterday, Daniel was watching this sideways range closely, but the breakout attempt above it failed and turned into a fakeout, pushing price above the highs. This move would likely trigger stop losses on existing short positions, fueling further upside and allowing gold to cleanly break to new highs, the ideal scenario. On the other hand, if price breaks cleanly above this horizontal consolidation range, that changes the picture entirely. In that case, price would likely push up to test the blue gap near the open, while intermediate swings would lean bearish, negating any buy setups along the way. That's the scenario Daniel was walking through, and if price plays out that way, any half-formed blue setup would be risky. So Daniel explains that a clearer, stronger price action signal or chart pattern becomes necessary before entering any sell trade. In the end, the prior day saw London session attempt a breakout above the Tokyo session range, but that breakout attempt clearly failed, setting up a sell signal. From the Tokyo session through to now, price has continued to develop a bearish setup, pushing significantly lower. Looking at the price action within this corrective swing, we can see the bearish rejection that invalidated the buy setup triggered the new low. So you can see this played out exactly as planned, including the minor pullbacks during the deeper retracement phase. Today's Trading Lab exclusive stream focused on two key technical points in the market analysis. As usual, the first point was the review of yesterday's market, breaking down the internal price action within this consolidation swing in detail. I walked through each candle one by one, then covered the downtrend continuation scenario and the exact criteria for switching to a bullish bias. For today's market, we remain in a downtrend continuation, so the bearish bias holds at the current monitoring level. That wraps up today's gold market analysis from Daniel.